Global market action, some commentary coming in there as well, but how will these overnight cues impact our own markets? We have our research team joining in, as always, to tell you what the trade setup is looking like and the stocks that are likely to be in the news, and of course, the action from the F&O space as well. Hey guys, a very good morning to all of you. Hormas, let me come to you. Looks like it could be a slightly muted day today.
It could be a muted day, but then it does not really matter how the start is, considering the last hour jinx that has been plaguing the markets recently. And it was the same happened yesterday as well. Now, in 4 out of the last 5 trading sessions, we have seen that the Nifty, after making an intraday high, has failed to sustain at those levels. As you can see in the graph on your screen there, even yesterday, the index was down almost 200 points from the day's high. And even the last 3 sessions, it has seen cuts of almost 150 to 300 points from the highest point of the day. So we keep that on the back of our minds. There is volatility at higher levels. And as a result of this volatility, the India VIX was up almost 6% yesterday. It's crossed the mark of 15. And now if it crosses that mark of 16.6, that will be a 52-week high for the VIX as well. But the broader markets, that was what triggered the sell-off yesterday. The small cap index corrected sharply from the highest point of the day. Even the mid cap index was down 450 points from the highest point of the day as well. The small cap index, though, mind you, is up for 8 days in a row. So we'll take note of that as well. A pocket that has been doing consistently well is the PSUs, but in line with the sell-off that happened yesterday, the PSUs also sharply corrected from the highest point of the day. But if you see, the delivery volumes in most of these were way below their 5-year averages. The SJVN, NHPC, NMDC, Indian Oil as well was up 7%, but the delivery volumes were far less compared to their 5-year average. Levels to watch now, the 20 DMA on the downside and the Nifty around 21,645, 21,650. That's the level to watch for. On the Nifty Bank as well, around 46,350. That's the 20 DMA that we need to keep an eye out for at the start as well. Earnings reactions today from Bharti Airtel, Suven Pharma, Ashok Leyland. Numbers came after market hours. Companies like Britannia, Godrej Properties, CAMS, Nykaa, they'll be reporting results today as well. And as you said, GIFT Nifty is indicating a muted start for our markets. Back to you.
Okay, all right. So those are some of the market cues that you should keep an eye out on. Of course, the global cues also to be taken care of. But let's talk about the stocks and news. Upasana is joining us now. Hey, Upasana, good morning.
Hey, good morning. So first up is Bharti Airtel. The company reported a healthy Q3. Revenues were in line and margins were slightly ahead. Next up is HDFC Bank. So IndusInd Bank says that HDFC Bank gets a RBI nod to acquire aggregate holding of almost up to 9.5% in the bank. That's the reason the stock will remain in focus today. Well, next is Tata Chemicals. The company reported a weak set of numbers. It says that the demand continues to remain weak and pricing pressure also continues. Talking about revenue, the revenue were down almost about 10.1% on YoY basis. Next up is Ashok Leyland. The company reported a healthy Q3. The Q3 margin beats estimates. Top line growth continues to be in the single digit. Coming to the margins reported by the company were 12.8% versus 8.8% on YoY basis, which was above our poll. IEX, the company has given its January business update. The total volumes are seen at 10,893 MU, which was up almost 26.1% on YoY basis. Next is Adani Total Gas. The company signs a mutual support arrangement with Inox CVA to strengthen the LNG ecosystem in India. Shree Cement also will remain in focus. It says that the no demand for tax deposition. Shree Cement has clarified on the report of receiving 4,000 crores of final IT notice. That was the media report that was circulating in the company. And lastly, LIC, the board meeting on 8th of Feb to consider interim dividend for FY 23-24. So all the stocks will remain in focus today.
Okay, all right. Thank you so much, Upasana, for that list. Finally, let's talk about the cues from the F&O space now. Mangnam is joining us. Hey, Mangnam.
Good morning. So yesterday, it was an extremely volatile day. The market opened higher, then went lower, then went higher, then again towards the end of trading session went lower. All in all, it was a day where the Nifty moved around in a 200-point range itself. But if you look at the intraday chart of the Nifty Public Sector Index, towards the end of trade, that came in for a fair amount of profit taking. And that was in line with the other set of the market as well. And with the kind of stocks that moved lower, it told you that it was more domestic selling than FII selling. And that's exactly what happened as well. The domestic institutions sold about 1,200 crores in the cash market. The FIIs on their part, though, bought 500 crores in the cash market. And not just that, they bought about 1,300 crores in index futures as well. The index futures premium yesterday on the Nifty was down from almost 100 points to 31 points. That would have meant that maybe someone sold in index futures not the FIIs for sure. The FIIs bought about 1,300 crores. They added around 11,800 short long contracts, covered a few short contracts, and as a result of which, the FII long exposure is now at 36%. Remember, this number at the start of the series was 22%, and the contract exposure is a net short of 62,000. This, remember, at the start of the series was close to 1.08 lakh contracts itself. In terms of active options, the fact that we're seeing profit taking at higher levels, call writers are extremely active. 21,900 call and the 22,000 call on the Nifty are active, telling you levels closer to 22,000 will continue to see some sell-off. It is Fin Nifty options expiry today, so that is something that we'll be watching out for too. And on the lower level, watch out for two levels. On the Nifty, the 20-day moving average, and the Nifty Bank, the 100-day moving average. Those are a bunch of levels. And in terms of stocks, remember, both UPL and NALCO have entered F&O ban, data point that we pointed out yesterday in the middle of the trading session.
Okay, all right. So these two stocks will be on our radar apart from the market cues that we spoke about. Thank you so much, guys, for joining us and prepping us up for this trading day ahead. We'll slip into a break. Up next, the interbank call rates fell below the repo rate of 6.5% for the first time in many months. We'll get you more details on the other side. Stay tuned.